Okay, peeps, welcome back. So today we're going to be going over the YieldMax ETF underlying stocks. I know it's been a long time since we talked about this, and I didn't want to leave you guys hanging, so let's go ahead and get into it. So the first one that we're going to look at here is Coinbase, and keep in mind we're not looking at the actual YieldMax ETFs, we're just looking at the underlines, at least the ones that they have public so far. And just so you all know, we're not going to be looking at the diversified ETFs like YMAX, YMAG, and ULTY. We're not going to look at those. We're just going to look at the single stock ETFs. Okay, so Coinbase. So this one, ever since this breakout, has had a pretty massive move. It actually did not even respect this resistance. It just smashed straight through it, which is pretty common in crypto. That does happen a lot with crypto. Maybe not so much with stocks, but with crypto, resistance levels and support levels, sometimes they just don't hold. They just rocket straight through it, and it's like, yeah, whatever. The charts are, the stock or whatever it is kind of like, resistance. Yeah, I don't think so. So we had a retest here, as you guys can see, of the EMAs and the zone. So I'd say that's very bullish. There is also a possibility here. It's a little difficult to see. Actually, if we go down to the daily time frame, this might be a little bit more visible. But as you guys can see, there is a possibility. This is not a guarantee, but there is a possibility here that we may have what looks to be like a bullish pennant. That's obviously a very good sign. So actually, yeah, it is pretty obvious on the weekly. So if we were to measure this bullish pennant here, basically the move would put us pretty much right into that resistance zone. So the target for this would be about $350. So that's a pretty high target. It's not quite at the highs, but as you guys can see, it marks this candle body high here pretty close. So there's some confluence there, but just to go over the support. So the support is at 213 to 230. Resistance is between 305 to 370. And if we measure the move from the support zone, which I'm not sure it's going to go back down to that, it's about 38% to 68%. But from the breakout point to the top of the range, or basically to the target, I guess, would be 20%, and then to the top of the range would be about 28%. So just so you guys know, if there's some swing traders out there that are watching this video too, you guys can also use this as kind of a guide, so to speak, as to how you want to conduct your swing trades. Just so you all know, if we swing trade, we generally do not do it on the weekly. We use that as kind of a like an additional way to help out our trade, but generally we only really ever trade the 4-hourly time frame. Like, for example, we would have gotten in Coinbase probably at the break of this trend line, and as soon as we got this golden cross and then the retest, we would have started trading at this point right here on the 13th pretty much, and we basically would have just simply held to the top until we got a break at least of this red EMA. So that could have been a 106% move. But again, if you're swing trading and this is you guys are looking at these stocks, this is a way to go about doing it. So Apple, take a look at Apple here. As you guys can see, we did have breaks of this first trend line, not so much of the second one. This could actually be a double top here that we're seeing looking back, because again, it did have two peaks in a resistance zone. That's generally a double top. It could also be considered to be an M pattern. If you guys don't know what an M pattern is, it's basically the opposite of a W pattern. So W pattern is a bullish pattern. M pattern is the opposite. That's very bearish, and the target would be all the way back down here at $125. Do I think it's going to hit that? No. But considering that Apple is below these EMAs, I would say it's compared to Coinbase is starting to look a little overbought. So in my mind, that would either be just simply a hold or a sell. Whereas Apple, this one is starting to look more like a buy. So it could potentially dump down here, or maybe down to like this 165 or 157. I'd be looking to load the boat on some Apple if it was me. If it wasn't for crypto, we're focused on crypto. But if crypto, like if we were in the crypto bear market right now, which obviously we're not going to be, this is one of the projects I'd be looking at to buy. So To get down to that zone down here is a pretty large drop. It's at least a minimum of 25%, maximum of 30%. So a lot of potential upside if you buy this thing all the way down. Again, resistance is 182 to 172, and support is roughly about 120 to 128 bucks. So notice that the price action is below the EMAs. We're getting a lot of red candles and rejection off these EMAs, but it still has yet to fully break through this resistance zone to the downside. So Amazon looking very, very bullish. I mean, this thing has not really had much of a retracement in basically since October of last year. So the pennant pattern still remains. The target's 210. We're in resistance currently. It's above this support, this trend line, the EMAs. Everything looks very bullish. No bearish divergence that I can see. No death crosses on the MACD or the RSI. So the pennant pattern, just that move alone would be. Oh, actually, got to remeasure this. Sorry about that, y'all. So the pennant pattern by itself would be about a 20% move, but I would not buy a breakout of a pennant on the weekly. Just my opinion, of course. So I think Amazon coming up to these tops here at roughly about $190 a share indicates to me that AMZ may be a little overbought. There may be a possibility for a pullback here. If we simply pull back into the bottom of this resistance, test as support, and then try to rip higher from there, it's about a 6% drop. But if we move back down to these EMAs, it could be anything from 10% all the way back into the zone, about 25% drop. So I would say this one's a little bit overbought, and the support is 137 to 149, resistance 170 to about 190. Google, this one's very bullish. It actually looks really bullish. So you guys can see these candle body tops here are higher than these ones back here in 2021, with the exception of these. If we get above these candles right here, I would say it's basically clear skies. This resistance is likely going to turn into support. By that metric, I would say that GUI is a little bit expensive, but again, Google and GUI have been beat down so much in recent months that GUI itself may, based on the price alone, may actually be undervalued, even though Google's at highs here. So another thing to point out is this break of a trend line. So we always look for these on bullish moves, and it had obviously a very clear gap up, as you guys can see. So support on this is 125 to about 132, resistance 144 to 152. Let's actually take a look at the chart and the price of GUI real quick, because I'm just curious to see what this looks like. So yeah, as you guys can see, since this top back here, we haven't really recovered in price on GUI, which is kind of interesting because Google is pushing all-time highs. So I find that to be quite curious. But yeah, as I said, based on the price chart of GUI in comparison to Google, there's clearly a divergence there. Google's going up, GUI's going down. If I was going to buy any of these so far, it would be Appley and GUI. These would be the two I would pick up. So now moving on, we're going to go to Disney here. Again, I would say Disney is very undervalued. This bull flag, the target is up here at 132. And we did have a close above this resistance zone here, so that is now turned into support. So I would say that the move on Disney is probably going to go higher, which means that DSO could actually be a good buy right now. So, and not just based on the fact that Disney is undervalued, but also that it potentially is going to have another massive move up. So from this candle all the way to the top here at this resistance, it's about 20 to 26%. So pretty big move. The current support is 114 to 120. And 146 to about 153 on resistance. And as you guys can see, based on the overall chart, we are way, way far away from the highs here. Just to give you a measurement of what that looks like. Disney is still currently almost 40% off the highs. So that means that potentially if this thing does go back up to the highs, that DSO could have some pretty good upside. So Meta, this is one that we haven't bought in a long time, just simply because it's so overbought at this point. I mean, you can see this shade of green here. We're actually starting to get some bearish divergence. So it's not really so obvious, but if I kind of just like draw a little line here, you can see it. It's actually quite difficult to draw this line. So little line going down on the RSI, whereas during that time frame the price is going up. That's what's known as bearish divergence, and it looks like the MACD is trying to cross on itself. So this thing could actually have a pullback, which could be your dip buying opportunity. And the pullback back into the previous support zone, or the current support zone, previous resistance, is about 30%, which, as you guys can see, was the peak over here in September 2021. So there is this bull flag or bull pennant pattern, but as you guys can see, it is not it's clearly not playing out yet. I mean, unless I want to go ahead and draw it like this, maybe it's like a bull flag or a channel of some kind. If this is actually a rising channel, that's bearish, but if it's a bull flag, then it's bullish. So we don't yet know, but I would say based on bearish divergence, this thing could pull back. So the current support is 350 to 388, and the peak up here is $520. So MSFT, this thing, very similar to Meta, is just, I mean, man, this thing just doesn't stop. Look at it. The move since the golden cross down here on the weekly has just been monstrous. I mean, this thing is up 70% basically over the course of about 14 months. That's insane. Just so you guys know, the stock market, the S&P generally returns like about 10% a year. This thing did 70% or 60-ish% in a year. So that's basically like 6 years worth of price appreciation compared to the indice. Okay, so support is between 350 to 370. The peak up here is 430. No clear price patterns. Not yet, anyways, although there is also a potential here for some bearish divergence. Again, RSI going down, price going up. So I would say if this thing's going to pull back, it's probably going to pull back to this support zone, maybe somewhere along this trend line. So about 370, 380, somewhere in there. The move on that could be maybe around 10, 12%. Not a huge move, but a decent move. Maybe something worth waiting for or DCAing down to. What you guys choose to do with that, that's up to you. So Netflix, this thing is in the resistance zone, and the peak, as you guys can see here, is about $700. No bearish divergence. Well, actually, the RSI kind of does look like it's diverting a little bit, but it's not super obvious yet. So I'm just going to say there is none as of yet. So the previous support zone is 390 to 410 and resistance 570 to 700. I would say likely this thing might pull back to about 470 to maybe 490, somewhere in there, before bouncing. So the move from that point would be pretty good. It'd be about 16 to 42%, which means that NFLY could have a lot of upside to go. NVIDIA, this thing is just an absolute monster. Ever since the break of this ascending triangle, this thing has just not stopped. It's been essentially nothing but green except this last week. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 straight weeks of green after the breakout. That is absolutely nuts. That's more than Bitcoin has had. Okay? That is just wow. I don't even know what to say about that. I think I've literally never seen anything like this as far as I can remember in all of my trading history ever. It's just crazy. So the top here is at roughly about 970. Current price 900, and the support is way down here. So pretty big drop, about 470 to 500. I would say it's definitely possible it could come back to that 500 level. I would not discount that out. If it does, it'd be about a 45 to 47% move. That's part of the reason why we cut our NVIDIA shares back by about 3/4. So we used to have 120 shares. Now we only have about 30. To kind of de-risk a little bit, because I mean, this chart is massively overextended. It just simply has not had a pullback. So, I mean, you guys can do what you want with that, but it looks a little bit risky to me. So Tesla, this thing's still respecting the channel. Not much has happened. There's no bullish divergence yet. I was expecting to see some of that by now, but I'm not seeing anything yet, which means we'd have higher highs or higher lows, I mean, on the RSI, and while the price is moving down, but that hasn't popped up yet. So current support, I would say, is probably going to be somewhere between 150 to about 180. And then your resistance could be somewhere in between 222 to 312. I typically don't measure it like that, but you can see the prices kind of going in between the different zones here. So we'll just say from the top of this zone or the bottom of the channel, the move up could be 32%, 71%, and 85% respectively. So from that perspective, I would say Tesla both are very undervalued. I would be picking up more at this point if it was me. So Block, this is an interesting one. We're probably not going to see huge movement on this stock until the actual Bitcoin bull run starts, which I don't think it has yet, even though Bitcoin's at highs. I know that sounds crazy, but we're not at the halving yet, remember. So just to give you guys a fresh perspective of what happened. So May 2020, we had the halving. Then Bitcoin went on its, well, this thing actually kind of front ran Bitcoin a little bit, but it pretty much went up and then sold off right around the same time that Bitcoin did, or pretty close to it. And then we had our peak, obviously, around the same time that the bear market happened. But the top is way, way far away from current price. So $285 compared to $84. Just this stock alone could move up like what, 3.5x? So I would say from that perspective, Squee is very undervalued. We did break out of this channel, just so you guys can see the price is above the channel now, but not yet above resistance. So I would say this trend line is probably going to hold a support. Likely what's going to happen is we're going to kind of test in this area here and then break out and shoot for this resistance. I think that's definitely possible. So I would say that this current area that we're in right now is actually support. So that's going to be between $76 to about $90, and then resistance 142 to 150. And if we get a move all the way up to this zone up here, you guys can see it's huge. So a lot of potential upside there for Squee. MSTR, this thing is even more ridiculous than than NVIDIA is, but we have actually been picking up shares of MSTY in the last week. So believe it or not, we are actually buying MSTY at the highs. Reason being is because MSTR is going to go up massively when Bitcoin goes up after the halving, which likely is going to happen. So I do not think that 1700 for MSTR is the top. It may be a local top, but it's not the top. Okay. So the only thing that concerns me is this kind of shooting star-ish looking candle that's bearish, although it didn't close red, so that's a good sign. Kind of a mixed candle there, I would say. I think if this thing pulls back, it could pull back to probably about somewhere between $700 to $800. I would say that's realistic. So the top is way up there at almost 2,000. That's a major psychological number. That's probably why there was some selling there. So assuming we get a pullback, the move would be another massive 167% from those levels. But if we do get the pullback, which is possible, there could be some kind of post having sell-off in crypto, and we've mentioned that's a possibility. It'd be about 60 to 65%. So, I mean, we're just simply not going to sell our shares, even if it does pull back. Reason being is because, again, we think that the majority of the largest moves in crypto are yet to come. But from a fresh perspective, I would say MSTR and MSTY is definitely overbought. So ExxonMobil, this one, I'd be waiting for a pullback on this one. Oil's been pretty crazy. If I was going to buy XOMO, I would have bought it down here. But we're in resistance, so support is 84 to 96. Resistance is 114 to 121. Just so y'all know, the move would be about 17 to 27% down. That does not include what could happen on XOMO. And every time we got to roughly around this $120 level, the last 3 times we saw it last year, each one of those times we got rejected from that area, that same exact area. So this is kind of almost like a triple top. I suppose the only good looking thing about this is we did have kind of a pullback and then a golden cross, which is, in my opinion, very good. So we had a break of the trend line. Then we had this kind of like bump and run or inverse head and shoulders looking pattern. Clearly hit the target, but we also have a golden cross on the MACD and the RSI. So that's very bullish. But again, I'd be a little bit weary if it was me buying in the zone. So it's up to you guys if you want to buy it or not. JPMO, I would not be buying this one because this thing is just ridiculous. I mean, it's just really, really, really overextended. I mean, this thing's had almost nothing but green for months at this point. It's crazy. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. Out of the last 22 candles, 21 of these weeks have been green. That is bananas. And the RSI is massively overbought at this point, which we have not seen in a very, very long time. As a matter of fact, it was never even that overbought ever, as far as I can see. So I wouldn't buy JPMO if it was me. You guys can do what you want, but support is 167 to 174. The top obviously is right now at 200. Pullback would be about 13 to 16%. So ARKK, this one is still very undervalued. Had a break of the trend line, still sitting at resistance. It's possible we could get a break out of it. We did have this golden cross here, which we have not had in a very, very long time. Last time we had one of these was in April 2020, so basically right before the Bitcoin halving, literally a month before the Bitcoin halving, we had this golden cross last time. And guess what? Well, okay, never mind. Actually, this was back in November, so not quite a month before the halving, but 6 months. But the point is, we had it before the halving, so the Bitcoin bull run could be very bullish for this because I believe the ARK ETF does have some exposure to crypto, like Coinbase and stuff like that. So current support still between 29 to 35. 50 to 54 for the resistance, and the top is way up here at $160. So to give you an idea of just how far off the peak we are, it's a lot. It's about 70%. So from that perspective, I would say OARK is still very undervalued. AMD, this one's looking a little expensive, but in my opinion, it does still look quite bullish. So I say this because this support zone here is about ready to test, or previous resistance is about ready to test as support. There's a possibility for a death cross here, but we haven't seen it yet. So the current support is 160 to about 167, and the top is 227. So this could be like potentially a bounce play, although it could go lower. That's possible. That would be about a 40% move on that one. I would say this is a little expensive for the YieldMax ETFs, but that's just me. But it's a little hard to judge based on the charts. So PYPL PayPal, this one is very cheap compared to its highs. You can see the highs is way up there at $310. So we have about a 5x just to get back to the highs on PayPal. Based on that alone, I would say that PYPY is very undervalued. It does also look like we had a break out of the falling wedge here, which is very bullish. The top of the wedge is actually the target, so about $102. And it also looks like we may also be getting a golden cross on the weekly, so that's also very bullish. So I would say that the zone that we are in right now is actually probably going to turn support. So $60 to $83 on that one, and then the next level is 104 to 124. So the move up there would be about 58 to 87%. That's a pretty good move just for a swing trade, let alone, buying something like PYPY. So MRNA, this thing did have a break out of the channel. That's very bullish. We bounced off of this support zone. There also does look like there was an inverse head and shoulders here or something like it. And we have yet to break out of that. So if we get a break out of that, the target's going to be roughly around $165. So we'll just do the measured move on that. So just to get to that point would be about a 60% move. So if that happens, MRNY could be a good choice. Support is 63 to 95 and 178 to 217 on resistance. And the top, as you guys can see, is way far away from where we're at right now. So about a 5x to get to the top. All of that tells me that MRNY is very, very undervalued. So as a bonus, we're going to do kweb. You guys know we can't leave this one out. So again, from the peak to where we are currently is about a 4x on kweb. This is also something that you could do the wheel strategy or cash secured puts and or covered calls on. That is an option. I have looked it up myself. It's possible to do that on kweb. Not so much on klip, but on kweb it is a possibility. So it does look like we might be maybe about ready to get to a point here pretty quick where we're going to break out of this falling wedge. If that happens, the target's up there at 37.65, which means klip is going to be moving up. So if we measure that move here, you guys can see to get to the top of the wedge, it's going to be about a 44% move. So pretty big move there. I would say if this thing has a breakout, so support is between 18 to about 26 bucks. If this thing has a breakout, it's probably going to go to the top of the wedge. So the top of the wedge is obviously up here, which lines up perfectly with these candle bottoms back here, as you guys can see. So anyways, this is the YieldMax ETFs. We kind of went over which ones are cheap and which ones are expensive. Hope you guys caught that. But anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and we will see you all later. Peace.